So where are the big opportunities in small cap? Joining us, two five-star fund managers. We've got Craig Hodges, co-portfolio manager of the Hodges Small Cap Fund, and Beth Lilly, portfolio manager of the Gamco Westwood Small Cap Fund. All right, Beth, you know, we talk about Europe, we talk about China possibly slowing down, we talk about the fiscal cliff. And let's focus on the third one, because the other two aren't exposed necessarily to most small caps, but the third one most certainly is. As a fund manager, how worried are you about the pending fiscal cliff?
You know, it's interesting. I'm not that worried, and I'll tell you why. I think it's a lot of it's discounted in the market. I think people have been anticipating the fiscal cliff. Everybody knows it's coming, and I don't really think it makes a difference who's elected president of the United States come November. I'm not that worried about it because people know that it's coming, and they're adjusting their business plans accordingly.
And Beth, what stocks do you think that are out there that can potentially just put aside all of that noise anyway?
Sure. You know, we look to identify companies that have interesting things going on internally in their businesses that can outperform irregardless of what the economy's doing. And my picks have to do with pretzels and snack foods, have to do with catheters and armored cars. And so, you know, my first pick would be a Rochester Medical, and that is, if they're a catheter company based here down in Stewartville, Minnesota. Jim Conway started this company many years ago. He and his family own over 10% of the company, and they are in two main businesses. One, they're in intermittent catheters and acute care catheters. And acute care is, in essence, when you go into the hospital and you need to have a catheter inserted. They have the only FDA-approved catheter on the market proven to prevent infection. And they're taking share from C.R. Bard, which is kind of the 800-pound gorilla. And the other business that they're in is in intermittent. So when you go home and you need to have a catheter, you need to use catheters. There's a new Medicare law that says, in essence, you can be reimbursed for 200 catheters per month instead of 4. So they're benefiting from those two trends.
Craig, I want to make the rather uncomfortable transition from catheters to Cracker Barrel. All right, one of the stocks that you like. Now, fiscal cliff. Listen, again, you think people are going to go out to eat if their taxes go up this much? If they're worried? You sound like you're not worried either vis-a-vis their stock picks.
Well, if we get to the kind of the situation that we got to last August, where there was actually that budget crisis, and it actually did start affecting a lot of the stocks we were in contact with. Management teams were actually saying, you know, it really did slow down. So if we get there, that could be a factor. But with Cracker Barrel, what they're benefiting from is mostly the lower oil prices that people are paying. A lot of their stores are on interstate highways, and with increased travel because of lower oil prices, you're seeing an uptick in their business. Cracker Barrel is a well-run company. The interesting thing about Cracker Barrel is since '98, they bought in about, I think, 63% of their stock. And so you're going to have some pretty big upside numbers in earnings coming forward. So, yeah, they're benefiting from lower oil prices. Plus, the consumer is still staying strong, we feel like. And like I said, the low oil prices are helping.
Indeed, and this fact about lower oil prices is certainly, you know, moving through a lot of your investing themes, you know, with retail, restaurants, and transport. So my question to you is, how much longer do you think we're going to enjoy that lower price of oil?
You know, I think it'll stay in a range between, you know, 85 and 95. The interesting thing is most of these industries have kind of prepared for a $100 oil world. So anything below that, I think, is going to be a bonus. So that, you know, some other areas, Cinemark. I think Cinemark we're seeing a real boom in the cinema business. A bunch of real good titles coming out. Cinemark has about 65% of their theaters here, but 35% in Latin America, which is going through a real growth phase. And the movie business there is kind of like our movie business was in the 50s and the 60s. It's kind of a brand new industry. So I think that's another area that should benefit from the consumer and low oil prices. Plus the heat, I think, is driving people to the theaters in record numbers.
Beth, quick question to you. How's the economy of Minneapolis doing? We like to get the local view.
That's a good question. It's okay. I would say it's reflective of other parts of the United States, but it's, you know, I'd say that things are better here than on the two coasts. Unemployment's probably a little bit lower here than on the East Coast or the West Coast, but it's spotty. There's parts of the economy that are very strong, and there are parts of the economy that are not so strong.
Well, go out and have a beer and do some lawn bowling on Brits, all right? Great bar. Craig Hodges,
just talking about Cinemark. We're going to be talking more about IMAX later on in the day.